So guys, last session we were talking about reassessment of lease. Reassessment of lease means originally at the time of recognizing lease liability, which is on the commencement date, you might have considered a particular lease term, even the option to extend was there. So you might have believed either option to extend will be exercised or will not be exercised. Similarly, termination option might be exercised, might not be exercised. Similarly, option to buy the asset might be exercised, might not be exercised. GRV ki so much amount I will pay and you might have estimated. Now, as the lease life goes on, subsequently changes in these assessments may come. So, examples of that are change in lease term, change in option to buy the asset, change in the amount payable towards GRV, or of course, if it is a variable payment, you have seen yesterday that a variable payments on the date of commencement, whatever indicator is there, whatever index is there, using that only you project all the variable lease rents originally. Subsequently, when update comes, then again remaining lease rents will be updated accordingly. So that also. So when all these things happen, whatever lease liability already there in your books of accounts, carrying amount of lease liability has to be remeasured. Since lease liability is anyway getting accounted at ACM, remeasurement is simple. It should be done in such a way that present value of revised future lease payments, this lease liability should reflect now. That's all. This type of thing, even debt restructuring concept also we have done while doing instrument standard. The same concept. Here the only thing is, when you are computing present value of revised lease rents, which discounting rate I should use? Existing rate or should I rework the latest discounting rate? So for that, in two cases you have to use new discounting rate. The two cases, one because of your reassessment, lease term increase or decrease is there. That, and when there is an assessment change regarding buying the asset. That means originally you thought that you will buy the asset at the end of the lease term, but now you decide not to buy. Or originally you thought you will not buy, now you decide to buy. In two cases, revised discounting rate you have to use. In any other case, whatever original discounting rate is there, the original IRIL or IBR, whatever you are using, that only will continue, sir. So lease liability will be updated. So update means either lease liability will increase or it will decrease. Corresponding effect, you have to give it to ROU asset. So that's all, sir. On this, a very fantastic question is there. Go to question number 32. Mark it important, sir. It is a fair chance of coming. Originally, when this question was given in the study material, the answer was small mistake was there. Subsequently, now they corrected the solution, but anyway, go through it. Entity W entered into a contract for lease of retail store with entity J on January 1/1/2011. Okay. The initial term of the lease is 5 years and with a renewal option of further 3 years. So overall maximum it is 8. The annual payments for initial term and renewal term is rupees 1 lakh and 1,10,000 respectively. Indirectly what you must observe is total 8 years period. First 5 years lease rent is 1 lakh. 6, 7, 8 ki 1,10,000. They are expecting a 10% increase. The variable or fixed amount? Fixed only. Continue. The annual lease payment will increase based on increase in the CPI at the end of preceding year. Now he brings a variable element into it. What he says is every year ending ki consumer price index, which is the base for inflation calculation, a CPI base you take and go and revise the next year lease rent. That means every year lease rents are increasing corresponding to inflation rate in the market. This type of variable lease rents, will I consider in computation of lease liability or not? You have to consider. For example, the payment due on 1/1/2012 will be based on CPI available at 31st December 2011. Now, ఈ లైన్లో I example in a word whatever he has given, no sir. I example he is telling one more point also now, indirectly. Carefully understand. What is the lease starting date? 1/1/2011. Normally, if I say lease is for a period of 5 years or 8 years and lease rent is 1 lakh, if nothing is given, we believe that lease rents are payable at the end of each year. But December lease rents are payable at the beginning of each year. A point explicitly he did not say anywhere. A example you have to catch. What is he saying? The payment due on 1/1/2012. Stop there. 2012 is second year. Correct? Second year beginning, why is payment due? Unless lease rents are payable at the beginning of each year. So second year beginning lo what lease rent you pay? For that you have to make an update by considering CPA available on the previous day. First year ending ka CPA. Like that. Ikkada brackets lo rates are. Lease rents payable at beginning of each year. Right? Entity W's incremental borrowing rate at the inception date and as at 1/1/2014 is 5% and 6% respectively. Stop there. Inception date ante 1/1/2011 okay. 1/1/2014 ante how many years? Why after 3 years he is giving you rate IBR? We don't know. Let's read. And CPI at commencement date ante starting date only, and at 1/1/2014 is 120 and 125 respectively. He is also giving you consumer price index ka number. Why? Don't know. Leave it. At the lease commencement date. Sir, commencement date is which one, sir? I don't know. Question first line they told that your contract date is 1/1/2011. Contract date is called as inception date. If no other information is given, you will assume that only as the commencement date also, because after record the initial recognition entry, no, when no other date is given, I will have to take that only. At the lease commencement date, entity W did not have a significant economic incentive to exercise the renewal option. Stop there. What does it imply? It means that originally when we took the lease on the commencement date, we thought that extension option we are not going to exercise. That means our lease term is only 5 years. In the first quarter of 2014, entity W installed unique lease improvements into the retail store with an estimated 5-year economic life. Entity W determined that it would only recover the cost of improvements if it exercises the renewal option, creating a significant economic incentive to extend. Is entity W required to remeasure the lease in the first quarter of 2014? Sir, remeasurement will be required or will not be required? Of course it will be required. Why it has to be required is, you are very clearly saying that originally I thought lease term is only 5, but after 3 years you are saying that lease term is going to be 8 years. So whatever lease liability you have already recorded, already accounted, our lease liability is not sufficient for the remaining entire revised lease life. And definitely lease liability has to be updated. Tell me, sir, is this a change in the lease term? Is this a change in the lease term? Yes. So when you do remeasurement of lease liability, that should be done at the latest discounting rate. Discounting rate lo standard gave you 2 preferences. One, IRIL, number 1. Number 2 is IBR. Is some IBR they gave. See there. First day IBR is 5%. On 1/1/2014 IBR is 6%. So 6% must be used for computing the remeasured lease liability. That's also, that's the question. You know what you got to do? First initial recognition you have to do. Travel up to 1/1/2014. Understand what are the carrying amounts of ROU asset and lease liability on that date. And then standing on 1/1/2014, go and do a remeasurement of your lease liability. So this is work is a little. Before you go to modification date also, some work is there. Starts with question number 32. What is the discounting rate? 5%. Lease term 5 years. Because that was your original assessment. Sir, right now, immediately have to pay a lease rent of 1 lakh. For that, P factor is 1. Tell me, sir, second year beginning, how much will you pay? 1 lakh only. In reality, how much will you pay? 1 lakh plus updated inflation. You have to take the inflation rate at the end of first year and you have to update it. CP index, you have to update it. Sir, don't write what I am writing. Watch. This is 0, 1, 2, like that. So here you are paying 1 lakh. He says today's CPI is given as 120. Here, actually, under second year beginning low, actually how much lease rent you pay depends on what is the CPA on this date. Suppose CPA on this date is 122. Then what you would have done is, if 1 lakh was decided when CPA was 120, if it is 122, how much should be the lease rent? Like that you have to pay. But for lease liability measurement purposes, I am standing here today. How will I know this CPA? I will not know. So, E number cannot be computed. What did our standard say? Don't sit and estimate inflation rates and all. Whatever index or whatever rate you have as on today, apply that only for all the periods. Correct, no, sir? What is today's CPA? 120. If every year 120 only is there, then how much lease rent will I pay? How much will I pay? 1 lakh I will pay. So, 5 years you have to take 1 lakh only. Did you understand, sir? Actually, table not required, sir. One line low annuity factor also we can close. The purpose of making you write the table is to explain this logic. Why a CPI index, how it's impacting. Chalo, sir, this is done. So, using this amount, write the entry. So carrying amount of RO asset on 1/1/2014 is equal to. Sir, originally you thought that the life of the asset is only 5 years. So you would have depreciated considering that overall life is only 5 years. Out of that, how many years are over? 2011 over, 2012 over, 2013 also over. 2014 beginning lo you are there. 3 years ki depreciation you provide. So 454, 590 minus 454, 590 into 3 by 5. I hope you understand why 3 by 5. Divided by 5 will give 1 year depreciation. 3 years depreciation kabatti into 3 by 5. Do the math, tell me the number. Into 2 by 5 also do directly. 181, 836. Equation little ambiguity is there because subsequently when you read and try to do this sum on your own, you get a small doubt. So before you get that doubt, I am only explaining that. Question he told that in the first quarter of 2014, after installing some leasehold improvements, you reassessed that lease term is going to increase. But look at the language I wrote in this paragraph. There is a reassessment of lease as on 1/1/2014. I did not say quarter. First quarter of 2014 low, you actually incurred lease improvements. Look at the language in the first quarter. First quarter low, at the time of you installing extra leasehold improvements, extra fittings in the building, then you decided that or then you reassessed that, chalo we are going to extend the lease. But I did not use the word first quarter in my solution. In fact, I confidently wrote the date also as 1/1/2014. Reason is, see, if you start thinking from quarter wise, frankly speaking, you can't do discounting properly. So discounting, when you are using an annual rate, the periods gaps should be 1 year. All cash flows are having a gap of 1 years, or one cash flow gap is only 9 months, and I can't do that. I can't do discounting there. Then discounting lo problem is there, frankly speaking. Another issue is, now that there is a change in the lease term because of your reassessment, you have to use the new discounting rate. Look at the question data. They gave you new discounting rate standing on 1/1/2014. But discounting rate 1/1/14 తీసుకుని third quarter కి entry ఎట్లా రాస్తాను సార్ నేను? So it's indirectly assumed that reassessment happened on 1/1/2014 only, but leasehold improvements he has incurred in the first quarter. Sir, it's not like after investing 30 lakh rupees, then I will think of extending lease term. No, before investing 30 lakhs rupees of improvements on this building, I will think about this much cost we are going to incur. Will I extend the lease or not? And a decision is something which is taken even before you spend a rupee on the building. Correct? No. So, how you have to understand that question is, improvement is happening in first quarter only, but the reassessment of lease term took place at the beginning of 1/1/2014. Like that, if you think is some work, sir. Chalo. Now you will tell me, sir, lease liability ka carrying amount how to get? Lease liability. I didn't get you. No. I am asking carrying amount, not remeasured. Carrying amount. Yes. Carrying amount of lease liability on 1/1/2014, which is beginning of fourth year. Sir, ICA sums lo little bit of problems will be there, sir. They can make it much more like an authoritative question, but they didn't make it like that. What can we do? Sir, technically now you are standing at 1/1/2014, correct? If you are standing at 1/1/2014, shouldn't the question give you CPA of the first 3 years? Correct, no, sir? First day ki CPA they gave, how much? 120. But first year ending CPA, second year ending, third year ending CPA. I need all that, no? If you don't give that CPA, I have to believe that every year you are paying only 1 lakh. Why will I pay 1 lakh? Remeasurement is some low, it's happening on 1/1/2014. Frankly speaking, remeasurement will happen every year for this sum. Why? As variable in the CPA, the moment CPA gets updated, you have to remeasure the liability. But he did not give you CPA for first year ending and second year ending. Correct, no? So there is a problem with that. If some little ambiguity is there, see, the ICA sums are, what can I do? I can only teach, no? So, particulars 1, 2, 3, 4. Sir, 5 years, no, sir. What is the goal of this? To ultimately prove that your ACM table is right. Adi goal? No, our goal is fourth year beginning ka opening balance I want. So fourth year ku this is all, sir. Man kochi kada an mottam cheyakudu. Right. Opening balance 454,590. What next? Very nice. Sir, this is advance lease rents. You can't add interest on this. 454,590 lease liability recognized first day. Immediately I paid 1 lakh. How can I apply interest rate on 454,590? Wrong. So yesterday, like we discussed, first you have to go and remove the lease payments. What is the discount rate? 5, 6, 5 only. $17,730. ఈ సమయంలో డేటా లేదు కానీ సార్, ఐడియలీ వాట్ యూ హ్యావ్ టు డూ ఈస్ బై ద ఎండ్ ఆఫ్ ఫస్ట్ ఇయర్ యూ విల్ నో ద లేటెస్ట్ సిపిఐ నో. బేస్డ్ ఆన్ దట్ లేటెస్ట్ సిపిఐ రీమెజర్ నెక్స్ట్ 4 years ka lease rents. Calculate the next 4 year ka lease rents. Using that remeasure your lease liability, corresponding effect give it to ROE asset. 372, 320, whatever is closing balance of first year, that won't be there. Our places some other number will be there. Why some other number will be there? First year ka CPI when I know, but second, third, fourth year, fifth year I will be using that CPI. No, so I have to remeasure. Some data is not there, sir. Data 272, 320. Stop there. 1/1/2014. A 195 to 233 whatever is appearing in your lease liability account, our number is not correct considering that there is an increase in the lease term. So definitely now remeasurement is required. Here one more doubt you will get. Sir, Kumari, fourth year starting low, one more 1 lakh also you have to pay, no? That also you have to pay on 1/1/2014 only. Before paying 1 lakh, 195,233 is there. I can also pay 1 lakh and say that 95,233 only is there. That way also is it. That is also balance on 1/1/2014 only. Now why did I stop before making the lease payment is, a question they gave you CPA at the end of third year. See. Third year ending CPA they gave. How much did they give you? 125. Third year ending CPA if you are having, with the help of that, fourth year beginning low, lease and what I am paying can be calculated. On your calculator all of you. 1 lakh divided by 120 into 125. 104, 167. This is the lease rent what you have to pay at the beginning of fourth year, not 1 lakh. But a fact when I know, I have to remeasure the lease liability also. So remeasurement is stage lo cheyali sir, not after paying that. Because now you will not be paying 1 lakh first place lo. You will be paying indexed one. 125 is what you are going to pay. Not only for fourth year, no, remaining years also. So anyway we are doing remeasurement not only because of update in the index, also because of updation in the lease term also. So at once remeasurement we will do. There are remeasurement for two reasons here. One, index lo change is there and lease term lo change is there. Sir, my second year, third year ki we did not pay updated lease rents. No information is given. No, you assume that the CPI index stands at 120. Real life lo also. First year lo 120, second year lo 120, third year ending it became 125. So fourth year ka lease payment will get affected. So is some itlaga cheyali sir. So carrying amount is ready sir. Right, just that also carrying amount of lease liability on 1/1/2014 is equal to 195,233. Raira. Okay, tell me this, sir. Sir, other than doing ACM table, is there any other way to get that 195,233? Labor work is there. That will not work. Will work, but it will be very difficult. Ledger account, sir. Draw lease liability ledger account. Slowly work out. Future cash flows and discount J's also you can bring it. That way also you can get it, sir. Correct. What are the future cash flows? According to original plan, total how many years? 5 years. 5 years low. Now already how many cash flows are over? 3 cash flows are over. Remaining how many cash flows are there? 2 cash flows. 2 cash flows if you discount also you will get 195, 233. Whatever is easy you can do, sir. What are the 2 cash flows pending? 1 lakh right now, 1 lakh after 1 year. This 1 lakh whatever you are going to pay right now, then present value will be 1 lakh only. There is another 1 lakh. 1 lakh 1 year back you discount it. You can do it on your calculator only. 1 lakh divided by 1.05 sir. 95,238. That is fifth year ka lease rent discounted to fourth year beginning. Fifth year beginning ka lease rent discounted to fourth year beginning. Fourth year ka beginning lo one lease rent is there 1 lakh. Add 1 lakh. How much is that? 195, 238. How much are you having? 195, 233. Rounding of error, sir. You can discount future cash flows also. This is more easy, in fact. See, this is the advantage you get when you do financial instruments very well. ACM observation, if you know, actually table, format, all this is not required. You understand where you are standing, what are the future cash flows, discounted automatically. That will be, has to be equal to your carrying amount today. It's smart work. It's okay. Some other time will be smart. Okay. Right, sir. On 1/1/2014, due to reassessment of lease term, we have to remeasure lease liability. Balance lease period is equal to 2 years, which is 2014 and 2015 plus extra how many years can you? 3 years, huh? 3 years extension. Also, latest CPA as at end of year 3 and 31st December 2013 is available at 125. This will be considered for estimating चलो सर year beginning tell me sir PV factor set 5 or 6 or 6 because there is a change in the lease term you have to take 6%. Sir, ఈ table లో very crucial table, sir. Very high chance of making mistakes. So you don't do anything. Just watch as I'm doing. Once you understand, at once you can write. Sir, till now, how many lease rents did you pay? 3. Very good. So don't write what I'm writing. Just watch. Fourth year again you have to pay. Fourth year under not fourth year ending, but fourth year beginning. Brackets. I'm just writing that it is year today. And again when you have to pay, fifth year you have to pay. Don't write. Sixth year also you have to pay. Seventh year also you have to pay. Eighth year also you have to pay. Sir, ninth year, 10th year? No. So overall 8 years, sir. So on that already 3 years is over. Remaining is 5 years. Okay. Now this is on 1/1/2014. How much lease payment you have to pay? Oh yeah, update and tell me. 1 lakh is wrong answer, sir. 1 lakh wrong answer ka? 1 lakh. 1 lakh is a number when CPI is 120. Now third year ending or fourth year beginning ki CPI is 125. So update that. 104. 104, 167. Fourth year ending ka CPI you know, you will not know obviously. So fifth year also you will apply the same 104, 167. Sixth year and the fifth year ending ka CPI do I know? I do not know. So here also I will be taking 104, 167. Wrong answer. Why is it wrong? Go back here. The annual payments for the initial term and renewal term are 1 lakh and 1,10,000 respectively. That means once your 5 years period is over, 6th, 7th, 8th year ka period lo rent 10% increase avutundi, sir. Compared to original rent, 10% updation is required. So 10% updation means 104, 167 plus 10%. And that is 114,584. Sir, here onwards it's not like every year 10% updation. No. Renewal period మొత్తానికి 10%, it should be higher than what you paid in the normal period. These are. In Samno, there are many places where we can successfully mess up this sum. Okay, so in this stage వరకు రావడం పెద్ద విషయం, sir. There are very chances before this, but even if you come here also, a fourth year lease rents ఒకటి, sixth year, seventh year lease rents ఒకటి. Here there are some careful adjustments. So what you do is 6% ki put a star mark, 10% ki put a double star mark. We will explain that notes detailedly. Now copy. Already some is having lot of twists. So when you carefully reading, just imagine, sir, ICA does a mistake in this solution. Already some is like this. They also make one mistake in that. I gave correct answer only. People were like complaining it was not matching with ICA answer. How can we do mistake in time value of money calculations? I saw so many people convincing that solution only somehow. YouTube and all. Ultimately they changed it. ICA changed. Yes, sir. How much are you having? 4 lakhs 90. Good, sir. Existing some 190 chiller is there. From that 195, you have to update it to 491. Revised lease liability value. 1 star के rate explanation, sir. Since there is a change in lease term, we have to take new discounting rate. As per the contract, lease rent for first 5 years is 1 lakh, and for renewal period it is 1,10,000, signifying that a 10% increase in lease rent beyond 5th year of lease. So increase in lease liability, $491,385 minus 195. How much is that? 195, 233. ఎంత వచ్చిందమ్మా ఇది? 296,152. So the entry will be rating is 2 lease liability 296,152, correspondingly debit ROI asset. Sir, is some obviously it's very important sum. Main thing is when lease rents are payable at the beginning of each year, our sums by default are slightly confusing, sir, because you are not used to doing many applications on that. So that being there, apart from that, a CP index updation okati, and next inflation 10% incremental in the renewal period. These two are the further points. You should know while doing this ACM table, you should stop at the beginning of 4th year without paying that lease payment, because the lease payment what you are paying at the beginning of 4th year is not 1 lakh, that is an updated number you will be paying. So you should know where to stop also for working out the carrying amount. Chalo sir, the concept is done. Sir, this is how you do reassessment and consequently remeasurement. Now next concept, sir, this is lease modification. Sir, this is going to be little heavy. Okay, so mentally get prepared. Sir, lease modification means, as the name itself indicates, modification. This is a change in lease terms and conditions. That means you might be doing a change in lease term, or you might be doing a termination of lease, or rather I can say early termination of lease. Increase in area of leased property means more area you are taking now compared to what you took earlier. Change in lease rents, the renegotiation. Originally we agreed to pay some rent. Now I am requesting the lessor to that I'll pay a lower rent, and he accepted for that. Or decrease in area taken. So first originally I took 2 floors. Now I say no sir, I don't want 2 floors. 1 floor then we will continue. If you observe, all these are similar examples what we did in reassessment only. Some examples at least are similar to what we did in reassessment. What is the difference between reassessment and lease modification is, reassessment is something which was originally planned at the time of original contract itself. What is modification is, whatever change you are seeing there are changes to originally contract, they are not there. Now you are incorporating. For example, you and me wrote a lease agreement for a period of 5 years. There is no option to extend, no termination option, nothing. A plain lease agreement, 5 years. 3 years is over. Now I say, I come to you and I tell you, lessor, please kindly allow me to extend the lease for another 3 years. You agreed. If you agree, the lease period will be extended for another 3 years. But you cannot call it as reassessment. Why you cannot call it as reassessment? Option to extend was there on first day itself. Huh? No. If it was there, I would have called it as reassessment. Earlier accounting will apply. Now, original contract terms as well, this was not there only. Today, newly you are incorporating. So here, the term reassessment is wrong. Accounting is called as modification accounting. Of course, calculation and all will be more or less similar to what we have discussed earlier only. It's not tough. Just understand that it's a new case altogether. Okay. A lease modification, sir. A lease modification, whatever is happening, a lease modification should be, go on listening, treated as a separate lease contract. Actually, the modification of existing contract only, but you will treat it as a separate lease contract, altogether a different contract. If 2 conditions are satisfied. Number 1, there is an increase in the scope of lease, plus number 2, increase in lease rents is at market terms. Now look at an example now. So a building is there, sir. In this 3 floors are there. I originally took this 2nd floor for lease. So since this is my original floor, taken on lease, for this already I am doing ROS at lease liability accounting. I am doing already, life is going on. Now, I went to the lessor and I told him, sir, business is doing extraordinarily well. Your building has got a lot of favors to me. So I would like to take even the 3rd floor on lease. The top floor also I want on lease. Now, option to take 3rd floor was not there in the original agreement. Now you went and requested and that fellow accepted. So now a third floor also newly taken on lease. Now tell me, sir, already one floor you are using. Now another floor also you are taking means, is it increase in scope only? Yes. It is pakka increase in scope. Next condition you have to satisfy is, lease rents whatever you are paying, how much lease rent are you paying for this top floor? Are you paying at market terms or are you paying at discounted terms? It depends, correct? No? For example, it's a absolute hot property on the main road, sir. If I go and ask the building owner that, sir, please give me third floor also. He said, okay, I'll give. Then you say, sir, since I am already existing tenant, no, sir, please don't take market rent from me. I'll pay 20% lesser than the market rent. Will he accept? If the property is a hot property on the main road, why will he accept, sir? He'll say, get lost. If not you, somebody else will come and take it. Correct? No, some gym or somebody will take in the fourth floor. For him, any floor is okay. Bank will not come to fourth floor. Supermarket will not come to fourth floor. Gym fellow will come to fourth floor. He will say that is also one exercise and he will cover. So, no sir, that's how it works. Okay. Anyway, so increased portion ki how much rent are you paying and you have to see. In case you are paying market rent without taking any advantage of existing leased asset ka advantage, if you don't take and freshly you have negotiated the top floor, then a standard says this modification whatever is there will be treated as a separate lease contract. In the sense, what is going to happen now? If fourth floor ki, you will go and write ROU asset account separately again. You will have two ROU assets, two lease liabilities. Actually observe, parties same lessee, same lessor, building same, floors different, but doesn't matter. Treat that absolutely as a different lease. ఇంకా modification accounting ఏముంది సార్, అది నేమ్ సేక్కి మోడిఫికేషనే కానీ modification accounting ఉండదు. Why modification account will not be there? ఆ fourth floor ki, it's as good as you are taking a new lease from a new party in a new building. So what will you do? Separately ROE asset, separately lease liability, modification accounting రాదు సార్ అక్కడ. Even though normally we may call it as modification accounting will not apply in that case because అది freshly negotiated property. Some small discounts and all building owner might pass on to you, but that still does not affect that it is still a separate lease. Example, our fourth floor is on rent, sir. So the owner of the building is somehow trying to find a tenant. He is appointing some broker, some consultants, he is putting ads somewhere and all. You went and asked him, sir, I will only take fourth floor, please give it to me. He said, okay, please take. Then you ask for a discount. Sir, I am already taking third floor, I am paying so much rent. No, please consider give me some 10% discount. Says, I can't give you 10% discount. If property is a hot cake, anyway, somebody, if you not do, somebody else will take, will not give you discount. But looking at your face, what he did is, see, because you are readily available to me, I can avoid some payments on paper ads, brokerage fees, finding a new customer, administration work, again legal charges, all this I can avoid, no? So that benefit I will pass it on to you. Or 10,000 or 20,000 or some reduction I will give you. But you are not getting anything at below market rate. Market rate you have to pay rent. Small discount I might pass on to you. Since I am getting the benefit, I will pass it on to you. That is not called as paying rent at below market terms. He is saving because of me that I am getting it back. Okay. Sir, if I have to find a property again I also have to search. I also have to incur cost for that. That indirectly I am saving here. Okay. So anyway, so this is a plain case, sir. E type lo some will not come in the exam. Because in this there is nothing to be asked actually. Because see, ultimately what is the answer? Ultimately what is the answer in this case? A modified portion, you have to treat it as a new leased asset. In this, where is modification accounting? E case will not come in the exam. Asking this case is as good as asking first question yesterday. So the question will not come. Okay. Next. ఈ two conditions లో if any one condition fails, means either it is not increase in the scope or అది increase in scope but lease rent is not at market terms. Our lesser fellow said, our lesser fellow is desperate to get somebody. COVID time, no sir, nobody is coming. If you say, sir, I will take fourth floor also, he'll see you like a god. Whatever rent you pay, he will happily take. Ante your existing leased asset, existing lease liability is helping you to acquire another leased asset at a cheaper rate. How can you treat that as a separate lease, as a part of this lease only? So, any one condition fails. Now, sir, here two possibilities are there. Possibility one. First condition fail అయితే what is the meaning of that? Increase in scope కాదు సార్, అంటే indirectly it is a decrease in scope. Possibility one is decrease in scope. Possibility two, any other case. If there is not a decrease in scope or it is increase in scope only but lease rent is off market terms, of the OFF market terms, like that. Now, sir, three scenarios I am showing you. Number one, modification resulting into increase in scope at market lease rent. I accounting already discussed, separate asset. Sir, ఈ two conditions లో one condition failed. Now, this should be either a decrease in the scope or it should be any other scenario. First, I will do any other scenario because that is easy. All you have to do is remeasure lease liability. Remeasuring lease liability is not new to you. Just now in reassessment you did. Same thing you do. But at new discounting rate you have to use. Old existing discounting rate will not be used anymore because the modifications are. How can I continue that? New rate, so you have to do remeasurement. Sir, when I remeasure, no sir, liability value will increase or decrease, no? Yes. Corresponding effect? ROE asset. So in a way, out of the three possible modifications, first is easy. ROE asset to lease liability, separately you will write, increase in scope. Second case, not a decrease in scope. Okay. If it is not a decrease in scope, reassessment low whatever you did, same thing you will do. Nothing new here also. On new discounting rate you have to take. The only danger fellow is this one. If there is a decrease in the scope. Here, I need numbers to explain this story to you. Okay, so I'll explain, sir. Whatever you understand, you try to catch. I'll make you write notes. Later on, 2 or 3 big sums are there. Very, very important, sir. Decrease in scope exam. Till now did not come. Why it did not come also, I'm telling you. Originally, 1 or 2 questions in this study mat were having mistakes. So they can't ask a wrong question, no. So they did not ask. Now everything stands corrected. And till now they asked questions on lessor. They asked questions on there is a practical expedient which will come later on regarding a COVID scenario. That and these questions did not come. High chance of coming, guys. So first go on watching, sir. At once I'll make you write all the steps and all. Sir, originally I took this entire full space on lease. Imagine that is the total 10,000 SFT space, sir. Okay. For this lease rent I agreed to pay 1 lakh per annum. Lease life or lease term, let us say, is 10 years. Now what happened is, in 10 years lo 0, 1, 2, 3, 4. 4th year ko vachesam, sir. 5th year lo, అంటే 4th year is over. In the 5th year, what you negotiated is, you don't want 10,000 SFT for your business. Half is enough. Here you have negotiated that require lease only for 5,000 SFT. One half only you need, sir. E portion alone you need. When you need only half portion of the space, will you still pay the same lease rent? If that is the case, why will I even reduce it? So obviously, future lease rents are going to be reduced. Okay. Now, Watch out this. Balance sheet at modification date. What will be there in your book, sir? Some ROU asset will be there. Imagine after applying depreciation for 4-5 years, it's today appearing at 6 lakhs. And I will also have a lease liability. Either after applying ACM for 5 years, this also will be appearing at some amount, no? That amount also I am writing. 5,50,000. Now, each stage low, you understood that there is a decrease in the scope of the lease. I'll tell you steps, sir. Have patience and understand. Step number 1, reduce carrying amount of ROU asset proportionately. Not accounting, sir. The calculation ante. What is the meaning of reduction of carrying amount of ROU asset proportionately ante, sir? A 6 lakhs amount, whatever you are saying, that is representing how many SFT with right? 10,000 SFT with right. But hereafter you will be having right only on 5,000 and a half mil. So, if 6 lakhs lo straight 50% remove it, sir. Therefore, ROU asset is going to be reduced by 3 lakh rupees. Remember this. Step 1 is done. Come to step 2. Reduce carrying amount of lease liability proportionately. So, what is the lease liability today? 5,50,000 minus 50%. Sir, why did you get even 50% idea? Half scope is reduced, no? So, half I am removing like that. Sir, everywhere you will proportionately remove like this, ante, sir. It's like this. If a lease modification originally only was planned, how much would have been the lease liability? Like that. Instead of computing like that, since it is half, no. Half ante, instead of 1 lakh, I would have paid only 50,000. Had I accounted like that only from the very beginning, today in my books, why will 5,50,000 will be there? It will be only 2,25,000. No, sir, like that. I am directly doing it. Okay. So 5,50,000 minus 50%, 2,25,000. Therefore, lease liability reduced by 2,25,000. Now, is step 1 and step 2, whatever is there, based on that, past journal entry. What entry will you write? Lease liability account debit 225 to or 275 chinama. Okay, fine. 275. This also 275, you know. Okay, nice. Lease liability 275. To ROU asset, how much, sir? 3 lakhs. Entry tallying? Not tallying. Gap, how much? 25,000. Guess where will this gap go? PRL, it will go. It's a loss, sir. Sir, why it is a loss? Why is it going to PRL? Simple, sir. I did something. Because of that, I lost an asset worth 3 lakhs. Correspondingly, I am also losing a liability of 275. Net asset only lost by 25,000. Loss. Go and debit that to PRL. This story lo gain also is possible, sir. If more liability is reduced than asset, then gain will come. So gain or loss will come, put it in PRL. Fantastic. Now one more last step is there. What is the last step is? Remeasure lease liability to reflect PV of future lease payments at new discounting rate. So, sir, already we remeasured. No. What you did, you removed some portion of your liability. But if you have to apply ACM, your liability, lease liability should represent future cash flows ka present value. Future cash flows and sir, future revised lease payments. And that too, since it's a modification, I don't have any bloody right to continue with my old rate. New rate you have to take. So, andukani modification. Sir, when you remeasure lease liability, again lease liability increase, decrease will be there, no? Yes. And adjust to ROU asset. This is what you have to do, sir. When there is a decrease in the scope. These steps carefully, if you remember, it's very simple. There are two questions, are very good questions. So overall modification story is first case, first possibility, plain vanilla case. What is that? Increase in scope. I increase the scope, ki rent also is at market terms only. Happily consider this as a separate lease. Easy. Case 2, it's a decrease in scope. Under E case. Decrease in scope lo, first asset ka carrying amount you reduce proportionately. Liability ka carrying amount you reduce proportionately. And then observe the change between these two reductions. That is either a gain or loss. Book it off in your PRL. Now, lease liability, now that there is a modification, definitely lease liability has to be remeasured. Remeasure it. How to remeasure? How you did in reassessment, like that only. Only thing is you have to compulsorily take a new discounting rate. Old discounting rate should not be used. So either lease liability increase will be there or decrease will be there. Adi correspondingly ROE adjust Q asset. If it is not a decrease in scope and if it is not case 1 where I can treat it as a separate lease contract, then you simply remeasure the lease liability at the new discounting rate and adjust correspondingly to ROE asset. That's all. This is modification accounting. Modification ki reassessment ki prima facie difference you should know. While reading the question, you should be very, very careful. Now class you will not get confused because after each concept our respective question I will be doing. Exam lo reassessment ki, modification ki confusion should not come. Okay, watch the question correctly. Write notes on this point. Right. A lease modification is a change in scope of lease or consideration for a lease that is not part of a big point is nothing but market trend, sir. Sir, two possibilities low. One is decrease in scope, one is any other case. A decrease in scope key, step 1, 2, 3, 4 steps will come. So plan space accordingly. If you are at the end of the page, go and write in the next page. Decrease the carrying amount of RO asset proportionately. Sir, on the other side, just step 4 as it is copy. Don't call it a step 4, just step 4 का matter copy as it is. अरे भैया, okay fine. It's not fitting unfortunately. I can reduce it but it will not be visible. See, because of your crying again after it. Sheet. Same as step 4 I can't write because if I write that you will apply step 1, 2, 3 also. No, I am smart. I am talking about you. First I'll write and then I'll write same as step 4. Sir, once you are going for modification, so old EIR is gone, sir. New rate only you have to take. Any case. New lease anyway new EIR, separate lease decrease in scope and a new discounting rate. Any other case also revised discounting rate. So discounting rate definitely will change off when you're doing a modification accounting. So guys, go to question number 33, please. Okay, lessee enters into a 10-year lease for 2000 square meters of office space. At the beginning of year 6, lessee and lessor agreed to amend the original lease for remaining 5 years to include an additional 3000 square meters of office space in the same building. So original space you took is 2000. Now you are taking extra 3000. The additional space is made available for use by the lessee at the end of second quarter of year 6. So whatever. So original 10 years lease low, 6th year low you took extra space also. And the increase in the total consideration for the lease is commensurate with the current market rate for the new 3000 square meters of office space adjusted for the discount that lessee receives, reflecting lessor did not incur costs that it would have otherwise incurred if leasing the same space to a new tenant. So it is like you obtained extra space at market rate only, but you received some discount. The discount is given to you not because you are an existing tenant. The discount is given to you because since existing tenant only is taking new property also, the lessor has saved some expenses for himself. Our expenses he is giving it to you as a discount, sir. Okay. How should the said modification be accounted for? So what's the answer for this? It's a very clearly increase in scope, that too at market lease rent. So you have to treat it as a separate lease altogether. Lessee does not make any adjustments to the accounting for the original lease of 2000 square meters of office space as a result of this modification. Don't touch existing ROE asset, existing lease liability. Freshly record a ROE asset, freshly record a lease liability. That's it. Right. 34th one, this is something we have to solve. Read carefully. Lessee enters into a 10-year lease for 5000 square meters of office space. The annual lease payments are 1 lakh, payable at the end of each year. Okay. The interest rate implicit in the lease cannot be readily determined. So lessee's incremental borrowing rate at commencement date is 6% per annum. So that's what they are taking. At the beginning of year 7, until 6 years is over, lessee lessor agree to amend. Underline that word. Now we are doing modification sums. It's easy to think in modification lines. Exam lo modification or reassessment doubts might come. Clearly amend and modification. Agree to amend the original lease by extending the contractual lease term by 4 more years. So actually already 6 years is over, remaining is originally 4, but now another 4 also got added. The annual lease payments are unchanged. 1 lakh rupees only will be paid. Lessee's incremental borrowing rate at the beginning of year 7 is 7% per annum. How should the said modification be accounted for? Sir, in a way, Sir, you taking the lease for extra period in a way speaks that there is an increase in the scope. But whether increase in the scope is happening at market rent or not happening at market rent, we do not know. No information is given. Earlier samlo there was information. In samlo nothing is given. Moreover, whatever existing lease rent is there, 1 lakh, which you are normally paying, same lease rent will be continued for the additionally extended period also. So, in the absence of any other information given, we can assume that our lease rent, whatever you are paying for that extended period of lease, that is not commensurate with the market terms. If you assume that it is commensurate with the market terms, you will not be doing modification accounting. You will be treating that as a separate lease contract altogether, sir. Okay. So, this is one version of thought. Another version of thought is, increase in the scope. This is not at all an increase in the scope. There are some people who argue that the lease term will increase, but the asset ka control is still the same asset. So since it is not increase in the scope, at the same time it is not decrease in the scope, you directly fall in the third category. Third category is any other case. Any other case, what is the answer? Simply you have to remeasure the lease liability and correspondingly adjust it to ROE asset. That's all you got to do. But change in the lease term, increase in the lease term, it is not increase in the scope is not a very valid argument, sir. Because earlier I was having a power to control this asset for up to 10 years. Now I have power to control this asset for 14 years. So definitely this must be treated as an increase in the scope. Only thing is, our rent is not commensurate with the market terms. We have to assume and solve. If you assume that that is with market terms only, then there is nothing extra you have to do. Treat that as a separate lease right now. And in that case, you will not do any accounting at all today. Once 10th year is over, at that time you will recognize ROE asset account debit to lease liability voluntary, right? 11th, 12th, 13th, 14 years. So anyway, if you look at the answer given here, he told modification will be accounted as separate lease if these two conditions are satisfied. He says, in the given case, as none of the above conditions are satisfied, modification will not be treated as a separate lease. Now, none of the above conditions are satisfied, and if he is telling, it means that this is neither an increase in the scope and it is not even at market rate, and he is assuming, sir. But this particular stand what ICA has taken in this sum will not match with subsequent sums. There is another sum where lease period decrease is there. Original, suppose is sum, sir, what is the remaining lease period? 7, 8, 9, 10, 4. Suppose if 4 and I make it 2, that will be definitely treated as a decrease in the scope. That's the next sum. But decrease in the lease term when it is treated as decrease in scope, but increase in lease term you have to treat it as increase in the scope. But he wrote there, none of the above conditions are satisfied, which is, in my opinion, wrong, sir. Okay. So anyway, what we can treat is, it pakka increase in scope, but that rent is not at market terms, and still you will do the possibility to value accounting. Even if you assume that this is not a increase in scope, this is not a decrease in scope, then also you will fall into possibility to accounting is not going to change. It's just that discussion point is there. Please write, sir. We'll solve this sum. At beginning of year 7, there is a modification of lease to extend the lease term by another 4 years. There is an increase in scope of lease is not commensurate with market terms. Cannot be treated as separate lease. So if it can't be treated as a separate lease, then two possibilities arise. I'll ask you, is it a decrease in scope? It is not. So you'll fall into the second possibility. Any other case, you will fall. We have to just remeasure the lease liability at beginning of year 7 and adjust to ROE asset. Sir, if I have to do that modification, first I have to go till year 7 beginning, no? Ante initial recognition, working out carrying amounts, all this job as usual you have to do. Start, sir, start. At commencement date, beginning of year 1. Lease liability is equal to present value of future lease payments discounted at the rate of, what is the original discounting rate in the sum? 6%. Directly apply annuity factor, sir. 1 lakh into PVIFA 6%, 10 periods. One lakh into 7.36. There are no other adjustments, sir. So directly lease liability ROE asset also. Carrying amount of the asset at the beginning of year 7 is equal to 7,36,000 minus 7,36,000 into 294,400. Check this once. It should be correct only anyway. Carrying amount of lease liability at beginning of year 7, applying ACM. Sir, you can do ACM table for 6 years and solve, but you will have to invest lot of time in that. What's the smart work you can do? Present value of remaining lease payments. Since you are working out carrying amount, nee accounting lo what rate is there? Adhe rate. PV of remaining lease payments at, what is the rate? 6%, which is equal to 1 lakh into Already 6 years is over, remaining 4 years is there. $3.4651. Can be computed even by preparing ACM table. You can do like that also. You can do like this also. A ACM method means if you have control, the idea you will get. So fine, sir. E stage low, I have to do remeasurement now. Due to modification, lease term increased by 4 years. As at beginning of year 7, remaining lease period or lease term is equal to 3 plus 4, which is equal to 7. I hope you are understanding how 3 came. What is 3? Original contract lo remaining 3 and freshly negotiated another 4. Overall 7 periods is left. Our 7 periods ka rents discounted to today, that should be a new lease liability. Revised lease liability should be equal to, yeah, all 7 years ki same rent only, no? So directly PVIFA, not 7%, not original 6%, now 7 5 7. 7% you take, 7% for remaining 7 periods. Revised discounting rate. Modification lo remeasurement ki you have to only use revised discounting rate. Remaining 8 years, count. You are at the beginning of the 7th year, correct, 8 years. 7, 8, 9, 10, 1, 2, 3, 4. Okay, fine. Then why did you say yes when I said? See. Anyway, work out. 1 divided by 1.07. 1, 2, 3, 4, 5, 6, 7, 8. How much is the discounted value, sir? 1 lakh into annuity factor, sir. 5.97 and 13. That's 597,130. What is your existing 346? So from 346, 510, you got to update it to 597,130. Correct. Therefore, two 50620. So write the entry, sir. ROI asset account debit to 35, sir. I hope you have taken this, sir. All of you. Right. Lessee enters into a 10-year lease for 5,000 square meters of office space. The annual lease payments are 50,000 payable at the end of each year. IRIL cannot be determined. IBR he is using 6%. Fine. At the beginning of year 6, 5 years is over. Now, lessee and lessor agree to amend the original lease to reduce the space to only 2500 square meters of the original space starting from the end of first quarter of year 6. So anyway, 5000 square meter space originally negotiated. You used it for 5 years also, and now you are saying that for the remaining period, I don't want 5000, I want only half, 2500. The annual fixed lease payments from year 6 to year 10 are 30,000 rupees. So reduction is there, sir. Lessee's IBR at the beginning of year 6 is 5% per annum. How should the said modification be accounted for? Chalo sir, let's start. This is very clearly a decrease in the scope. So first if you go work out the carrying amounts up to the date of modification, thereafter step 1, 2, 3, 4 you have to apply there. Easy only. Lease liability is equal to 50,000 rupees, sir, per annum into PVIFA. What's the discounting rate original? 6%. For how many years? 10 years. Earlier we worked on 7.36, huh? So 736,000 half year rate now. 3,68,000. At above you need not write if you understood what we wrote. But your understanding level today, will it hold good after some 6 months, 1 year when you open also, depending on that, our brackets whether you write or not depends. ప్రతిసారి దొరకను. Fine. Next, sir. Modification. At beginning of year 6, there is a modification to continue the lease only for 2,500 square meters instead of 5,000 square meters. Sir, e particular modification is a decrease in scope only where area lo decrease is there. Area lo decrease undi kabatti you are able to work out this percentage. Every case lo percentage lo proportion will not come. For example, ide sum lo say original remaining lease period is 5 years, but hereafter we negotiated that the remaining lease is not 5, it's only 3 years. అది కూడా decrease in scope. అక్కడ నువ్వు పర్సంటేజ్లో క్యాలిక్యులేషన్ మైట్ నాట్ బి యాప్ట్ దేర్. ఓకే, సో అది కేస్ టు కేస్లో ఇట్ విల్ చేంజ్ సార్. ఈ సమ్కి ఇది కరెక్ట్. దేర్ ఈస్ ఏ డిక్రీస్ ఇన్ స్కోప్. So whatever steps we discussed, are steps you write. Answer automatically will come. Decrease ROU asset proportionately. Therefore, reduction in ROU asset is equal to, what's the carrying amount now? 184. 184 minus 50% చేస్తే revised carrying amount will come. I don't want that. I want reduction value because entry రాయాలి కదా సార్. 184 into 50% which is 92,000. Okay, before we move on to step 3, is step 2 once again understand clarity important. Don't write, if you want to write, but don't disturb your notes. Side somewhere you write if you are writing this. Sir, balance sheet lo you have ROU asset appearing at 1,84,000. E 1,84,000 is a liability, sorry, is the asset showing your control on 5,000 square meters. But hereafter your control will be only on 2,000 square meters. So if I say half of this asset should disappear now, it makes sense there, because earlier 5,000 square meters ke 1,84,000 asset in, but 2,500 it should be only 92,000. So that is fine with that. Now lease liability appearing at 210,620. How can you reduce lease liability by half like that? How far this is sounding right? Asset ante mana control nunchi half is going away. So asset lo half removing is okay, but liability lo half removing, how far it is correct? We removed. Okay, definitely I am removing, there is no doubt. But how to justify this is, there is nothing to justify here. We just understand the assumption behind that. How you have to think is, if originally only, from the very beginning only, had you contracted this space only for 2,500 square meters, today మన balance sheet లో ఎంత liability ఉండేది? అది యాక్చువల్గా మనం వర్క్ చేస్తాం సార్. Now, our lease period is 0, 1, 2, 3, 4, 5, 6, 7, 8, 9 and 10. If from originally only we contracted for 2,500 square meters, my lease rent would not have been 50,000, no, it would have been only 25,000, assuming it is 25,000 only. So 25, 25, 25, 25, 25, could go 25, 25, 25, 25. Now you are standing here, sir. Is somehow we are standing here, 5th year ending or 6th year beginning. Whatever you are reducing 105, 310 and the remainder answer which is another 105, 310. Another 105, 310 is nothing but the remaining 25,000 ka present value here. Ante originally only had we taken 2,500 square meters of office space and we were applying ACM accounting on that, today your liability would be appearing at 105, 310. But actually today it's appearing at 210, 620. So a half I am removing. This is direct into 50%. But actually the background thinking behind that is, had we done this originally only, today what carrying amount would have been there? Reach there first. So from 210, 620 reach to 105, 310. And I have to remove 105, 310. Our line directly wrote. And the background in the meaning on, sir. Step number 3, please. Write the entry, sir. And automatically effect will come there. Entry is debit lease liability with 105, 310 to credit ROU asset with how much? 92, 92,000. And see, then there is a gap. 8 at 5, 13,310. This you transfer it to PRL. Now, technically speaking, at this stage, therefore, carrying amount of ROU asset after step 3 is equal to year beginning ki 184 is there. Just now you removed 92. Remaining 92,000 is there. Carrying amount of lease liability is equal to 210, 620 was there, but out of that you removed 105, 310. So another 105, 310 is there. Actually speaking, asset to there is no problem now, but liability to there is a problem. Reason, sir, because of the liability reduction what you did, You indirectly are saying that in future your lease rents payable each year are 25,000 per annum. Is it? That's what you did accounting now. But actually in future the lease rents payable in the question given are 30,000. So a liability in 105.310 is not right. Reason number one. Reason, sir, just because half space you are vacating does not mean that lessee will today give you half discount. First day had you negotiated, it's a different thing. But now, why will he reduce from 50,000 to 25,000? Look at the question. From 50 he is reducing it only to 30,000. And your liability is to pay 30,000 per annum for another 5 years. E liability does not reflect that. Number one. Number two. Now that there is a modification, the old discounting rate is waste now. You have to use a new discounting. Andukani step 4 cheyali sir. Whatever you did now, that is not remeasurement. That's not remeasurement. Remeasurement will happen now. What you did now is an adjustment you did. Now remeasurement you do. No, logic, if you understand the steps, will make sense, sir. Remeasurement of lease liability to reflect PV of revised future lease payments at revised discounting rate. That should be equal to 30,000 is what you agreed to pay. PVIFA. Remaining 5 years is there. Now today's discounting rate, pick up from the question. Originally we used 6, now it is 5%. Remaining 5 years. Which is 4.329, 5. And this is 129,885. మన books లో ఎంత ఉంది సార్? 105,310. So from 105,310 raise it to 129,885. Write the entry, that's it, over sum. Entry will be ROU asset account debit to lease liability. Now, therefore, carrying amount of ROE asset. Last time we made it 92,000. Now 24,575 again you increased. 116,575. Now one small thing you observe, at beginning of year 6, ROE asset originally was 1,84,000. Today it became 116,575 after so many adjustments. Like a lease liability was how much? 210,620. Yeah? 210,620, we ultimately brought it down to 129,885. Now, understand the impact change here. Liability decreased, definitely decreased. 210, 620. After all drama, it became 129, 885. So liability decreased by 80,735. Whereas asset also decreased. 184,000 minus 116,575. 67,425. అంటే liability asset correspondingly did not decrease. Okay, so liability decreased more. Liability decreased more is good only enough for you. A gap only exactly we have thrown it off into PRL. You can check the difference between these two gaps. Gap ka gap you see 67,425 minus 80,735. 13,310. That's exactly what we have thrown off into PRL. This is overall accounting of this. Sir, did you understand? This is only decrease, sir. This is the next question where there is an increase in scope also, decrease also. And the increase is not at market rent. So you have to do a plain remeasurement in one scenario and again the 4 steps in one scenario, all in a single lease contract. So there it will be even more fun. The analysis if you have, it will be nice, sir. If you want, you can write this or else you can skip. Nobody will ask you all this. This is just for your comfort.